So what is a good withdrawal rate for retirement planning? What products and tools should you use? Should you buy bonds? Should you get an annuity? I'll answer those questions. And if you stay to the very end, I'll go over what a leading retirement researcher describes as the true retirement plan coming up. Hello everyone, my name is Matt Ragudo and I'm a chartered retirement planning counselor, and I help individuals navigate their financial future towards their ideal retirement. For more retirement planning videos and topics like this one, please consider subscribing and check back here from time to time so you can get rid of uncertainty and make your plan. Before we get into today's topic, I'd just like to disclose, as a financial professional, the materials gathered for today's video is for information and educational purposes only and should not be relied on or considered advice. Please see your individual tax, accounting, legal, and investment advisors before initiating any kind of transaction. Okay, we got that out of the way. So what is a safe withdrawal rate for retirement, and should there even be one? If you saw my video up here about the 4% rule, you know that that's no longer a thing. So what is a safe withdrawal rate and how do you get one? Well, let's first go over a few things. Number one, where can you get a safe withdrawal rate from? Number two, how do you choose which one of those safe withdrawal instruments is the one for you? And lastly, what a leading retirement researcher says is pretty much the only way you can have a safe retirement. First, what are the tools you can use to get that safe withdrawal rate? Well, when we think of safety, we think of things like savings bonds, maybe corporate bonds, and annuities. Of those two safe withdrawal instruments, the bonds and the annuities, which one is going to be better? Well, let's first discuss the pros and the cons of a bond. Well, the pros of the bond is that it is guaranteed, contingent on the issuer's credit rating. So if you're getting a government issued bond, it's pretty much 100% chance that when the bond is due, they will pay you the principal amount. Another pro is that the interest rate and the coupon is determined when you buy it. So there's no fluctuation, and you can make with some certainty that is the amount you're going to get. All right, so what are the cons? Well, the cons for the bond is that they're paying very low rates currently, and if you were to construct a 30-year bond ladder today, you'd be looking at something like 2% or maybe 2.5% of the amount of income that you can draw from your assets, and hopefully it'll last those 30 years. The second thing that's a con, if there's any kind of an incident, any time you need to draw on more money than those bonds provide in the form of coupons or planned maturity of the bond, you would actually be selling the bond at a potential loss, and you'd sabotage your entire income plan if you needed to draw money from it too soon. The last con I'm going to talk about is the fact that if you last longer than those bonds, you potentially will have no additional income. So now we're done with the bonds, let's go to the annuity. So annuities have had a lot of bad press in the past, and it's for a lot of different reasons, but let's build the case for an annuity anyway. For an annuity, the pros for the annuity start here. It's a guaranteed amount for the rest of your life or for a certain term. You can buy annuities with a life-only payout. That's going to mean that they're going to send you a check monthly or annually, however you want it, for the rest of your life. The other pro is that the rate that you get paid is going to be higher than almost any other instrument you can find, and it's going to be guaranteed. The last pro for the annuity is that a lot of the newer annuities have features where if you need a lot of money at one time for a long-term care event or for some kind of a medical emergency, they have provisions within the policy to allow you to tap into more of the money sooner. All right, so what are the cons of the annuity? Well, the cons are that, let's say you purchase the annuity and the next month something terrible and tragic happens and you pass away. A lot of times those immediate annuities will keep all the money that you put in there and may have only paid you once. The next con of the annuity is that once you get it started, most times you can't touch that money at all. So a lot of people ask me, why or how can the annuity company actually give me lifetime income? Well, annuities benefit from something called mortality credits. It sounds kind of morbid, but mortality credits is the credit you get as an annuitant or a member or someone who bought the annuity for living long. It is subsidized for those people who, as we said in the prior con, die too soon after purchasing an annuity. And what it allows us to do as retirement planners and as beneficiaries of the income stream is that we can forego the risk that the bonds have about, outliving our money. The annuity will always send us those checks, provided of course that the company that sold the annuity is still around. So make sure when you do look for an annuity, you go to the bigger and more sustainable companies. So, the retirement researcher Withdrawal, what he decided or what he kind of suggests to do is to have a more flexible retirement plan. Retire around the 4 L's: the longevity risk, liquidity risk, lifestyle needs, and the legacy needs. So, build a holistic plan. And that is pretty much what retirement planners like myself prescribe to, because we can't really give you a rate or a number. It's going to really decide on what you need, what your lifestyle demands, what your legacy demands, and how we're going to position all of the monies that you have access to, your IRAs, 401ks, maybe real estate investments, your business. How do we position all those things to supplement or to give you a retirement plan that works for you and is safe? Well, I hope today's video answers some questions about what a retirement withdrawal rate looks like. Sorry, there's no clear-cut answer, but that's kind of the world that we live in. If you want more information like this, consider subscribing. If you thought the video was valuable in any way, please do like it and share it with a friend who may find this content valuable. And remember, uncertainty is what we plan against. See you in the next one.